All right, in this video, I want to cover the question, does my C corporation need to file a Form 1120 tax return each year that it's in existence? And I get this question a lot because a lot of people set up C Corps and maybe there's no activity, they never really do anything with it, or there's only expenses, so no profits. And the question is always, well, do I need to bother, right, if the company's not making any money? The short answer is yes, absolutely. Always file the return for every year the company's in existence, and I'm going to show you some of the reasons why you should be doing this. So every for-profit corp formed under state law is by default treated as a C Corp for federal tax purposes. Okay, so that's important because by default it's a C Corp. If you want to file an S election and make an S Corp, you could do that. But for the purposes of this slide and the rules and the penalties and everything, I'm just going to be addressing it as if it's a C Corporation filing a Form 1120. Now, like I said earlier, C Corp should always file, even if the company's not making money. And so let's get into some of the reasons why and some of the late filing penalties that could apply. So C corporations, if they file late, they're subject to a late payment of tax and a late payment penalty, essentially. So if a corporation doesn't file its return by the due date, or if it doesn't pay the taxes, it's going to be subject to a penalty of 5% of that unpaid tax for each month the return is late. Okay, so notice how the late filing penalty is a percentage of the unpaid taxes. Okay, so if you have a corporation that has a net operating loss, so an NOL, right, so it only had expenses or it had expenses that exceeded revenues, should it still be filing this Form 1120 if it has no taxes owed and won't be subject to this penalty? Again, the answer is yes, always file. So here's why. First, net operating losses can be rolled forward, right? So if you have a corporation that has expenses, you want to capture those expenses because the net operating losses can be rolled forward to subsequent years, and you can use those losses to offset future taxable income, right? So if you decide to just kind of waive filing it this year because you had only expenses, it's really dumb because if you had expenses, you want to be able to capture those in future years and it'll help lower your tax liability. Okay, so the message here is that NOLs, are not lost forever, right? There used to be a 20-year expiration on them, but under recent tax reform, they've been extended indefinitely. So if you have net operating losses, file the return, roll those things forward. Now, here's where it gets a little tricky depending on what kind of business activities or interests your corporation has. So this is why I always stress filing the tax return, even if you had no activity or just NOLs. Now, every time you file a tax return, a lot of times you're including certain schedules, additional forms, and disclosures. And so even if the Form 1120 itself might not be subject to a penalty, you could incur a penalty if you fail to file the return that needed those additional disclosures. So let me go through an example to illustrate this point. So John is the sole shareholder of a Delaware corporation, which is taxable as a C Corp. So he didn't file an S election. Now the corporation generates no revenue, and it had only $2,000 in expenses, so he has that NOL of $2,000. Now, the NOL of $2,000, again, if we go up here to the late payment of tax, if he doesn't file the return on time, he's not going to have that 5% penalty because there's no taxes due. But we can't just stop there. We need to look further at the activities of the company. So the corporation also formed a sub in the Cayman Islands, right? So it formed a Cayman Islands Limited Company, which is a corporation. It put $500 into the Cayman Islands entity. And then the Cayman Islands entity had $200 in legal fees during the year and generated no revenue. So we've got two entities that had only expenses, no revenue. Does the Delaware corporation need to file an 1120? Yes, and here's why. The 1120 needs to be filed because the U.S. corporation has an ownership interest in a controlled foreign corp. That's a CFC. And CFCs have certain disclosures, right? So the Form 1120 has that net loss of $2,000. It won't owe any taxes, so that 5% fee doesn't apply. However, John needs to consider that Form 5471 obligation for the CFC owned by the Delaware Corp. So the CFC must be filed for every year that a U.S. person has an ownership interest in a controlled foreign corp. And that there's no de minimis rules here. So if the foreign entity has no activity, you still have to file the 5471, which has to be attached to an 1120 tax return. Now, failure to file this form results in a $10,000 penalty. So this is the kicker here. You might not be penalized for filing the 1120 late or not at all because you had an NOL at the entity level. But if you didn't file the 1120 and you didn't include this additional form 5471, now you're looking at a $10,000 penalty for not filing a return for a company that had no profits, right? It had no revenue, only expenses, no profits. This is just the way the U.S. tax rules work. The IRS wants these disclosures filed, even in cases where the company doesn't make any money. So, again, just to recap, the short answer here is always file a tax return because you never know what kind of additional little, hidden disclosures or things might be required. And again, for a corporation, NOLs are key, right? If you have an entity that has no revenue but only expenses, file and get those things on record and rolled forward to be used in a future year. So that covers it for this video. Thank you for watching. If you have any questions, please leave me a comment below. Happy to answer any questions I can, and I look forward to seeing you again soon. Thank you.